You got a call from your insurance company. They're raising your rate, or they're going to drop you entirely. And if you're about to buy a home in East County or sell one, you're probably wondering, is this going to blow up my deal? The honest answer, it might, but it doesn't have to. What I want to do today is tell you exactly what's happening, what it means for your specific situation, and what you can do about it right now. I'm Steven Rotsart with Caldwell-Maker Realty, the GOAT of real estate as per my kids. I've been working in East San Diego County for over 28 years. La Mesa, El Cajon, Santee, Spring Valley, Jamul, and San Carlos. This is my market. I've closed over 1,000 transactions here. I'm the #1 ranked agent in the zip code 91941. And I tell you this not to impress you, but to give you context for why this topic matters to me so much right now, because I'm seeing this insurance issue affect real deals, real buyers, real sellers right here, right now. Let me walk you through it. Here is the big picture. California is in the middle of a homeowners insurance crisis, and it's really not a subtle one anymore. 7 of California's 12 largest insurance companies have paused or restricted new policies for 2022. State Farm, Allstate, Farmers, Nationwide, the names that you grew up with living here in California. When they pull back, homeowners get pushed towards something called the FAIR Plan. That's the state's insurer of last resort. It was never designed to be anyone's primary option. As of early of 2025, over 555,000 California households are currently on the FAIR Plan. That's nearly 4 times the number in 2018. And the FAIR Plan costs 2 to 3 times more than a standard policy with less coverage. On top of that, state regulators recently approved a rule allowing insurance companies to pass their own reinsurance costs up to you. Industry estimates say that alone could add 40 to 50% on premiums. Now, let's zoom in just on East County. This market has always had more exposure than coastal San Diego communities. We sit near wildland urban interface zones. Santee, El Cajon, Jamul, and parts of La Mesa all carry higher fire risk designations. San Diego County saw a 26% increase in land classified as a very high fire hazard under the new CAL FIRE maps. And our housing stock here is also older. Homes were built in the 1960s, 70s, and 80s. Insurers now flag homes over 40 years old for additional scrutiny. More documentation, more requirements, longer timelines. All of that is very real. None of this is a cause for panic though, but this is something that you need to understand before you make a move. If you're buying right now, here's what you need to know. First, insurance is no longer a last minute detail. It used to be something that we figured out kind of towards the end of escrow. That's not the world we live in anymore. Your lender's going to require proof of insurance before you close escrow. If you can't get it, or what you can get costs far more than what's expected, that can delay closing or actually even blow up the deal entirely. The California Association of Realtors found that roughly 7% of deals fell out of escrow in 2023 specifically because buyers couldn't get coverage. And I can tell you that from personal experience. We had transactions that canceled solely due to insurance. And here's what most buyers don't account for. Your monthly payment isn't just the principal and interest. It's PI, TI, principal, interest, taxes, and insurance. If your insurance costs jump from $150 a month to $400 a month or more, that's a real change in your monthly number. And it could affect how much you actually qualify for. What used to be a $500 a month premium is now closer to $1,000 for some homeowners in East County. So what do you do? 1, get insurance quotes before you make an offer on a property, not during the escrow period. Before, know what coverage will cost on that specific property. 2, ask about the home's fire zone designation. Is it a high or very high fire hazard zone? That affects who will insure the property and at what price. 3, ask when the roof was replaced. Insurers scrutinize older roofs heavily. A 25-year-old composition roof can get a policy declined or even flagged. 4, if the FAIR Plan is the only option, understand what it does and doesn't cover. It covers fire, but it doesn't cover theft, water damage, or liability. You typically pair it with a separate difference in conditions policy. That adds costs and it needs to be in your budget. 5, work with an independent independent insurance broker, not just one carrier. The market is shifted towards specialty insurers and surplus line carriers, and many buyers, they've just never heard of those companies. An independent broker can access those markets. Now let's talk about sellers, because this cuts both ways. When a buyer makes an offer on your home, they're going to have to get insurance before they can close escrow. If that process hits a wall, they can't get a policy, or they get sticker shock on the cost of the insurance policy, you're gonna feel that in your transaction. Deals are slowing down. Buyers have gotten cold feet, or they just come back to you with a price reduction request using insurance cost as a leverage. There's also a disclosure piece here that sellers need to know up front. California requires you to disclose if your property is in a high or very high fire severity zone. As of 2021, if your home is in one of those zones, you're required to provide documentation of a defensible space inspection when you sell. Now, this is something that your agent should be doing for you and advise you of. And on top of that, most of these reports are all prepared by third-party vendors, so it's not something that you need to do specifically as a home seller. It just needs to be ordered, and those inspections need to take place as part of the transaction. You also need to disclose any prior insurance cancellations or non-renewals. Buyers are going to ask, lenders will ask. The cleaner your documentation, the smoother your sale is going to go. The way I work with sellers in this environment is to get ahead of all these situations. Before we list the property, we look at what insurers are going to see: age of the roof, proximity to brush, zone designation. We assess all of what the coverage looks like for the potential buyer, and we price and position the home with that in mind. Sometimes that means recommending a roof upgrade before the listing. Sometimes it means preparing documentation that makes the insurer's job easier. Sometimes it's simply about pricing to account for the buyer's full cost. Sometimes it's as simple as just referring the buyer to the right insurance broker, of which sometimes we reach out to before we ever list a property. In East County right now, the sellers who do all of this work up front are the ones who are closing. Whether you're buying or selling, here's your next move. For buyers, step one is to know the insurance picture before you fall in love with a house. That's not a deal breaker, it's information. And information is gonna give you leverage. Step two, you wanna talk to an independent insurance broker early, not a single carrier agent. Someone who can shop the full market of insurance policies. Step three, build insurance into your full monthly payment. Do that math from day one. If the true cost of home ownership doesn't work, better to know that before you go into escrow. Now, for sellers, step one, find out your home's fire designation today. You can look it up on the CAL FIRE website. I'll put a link to it right down below. It's free and it just takes 3 minutes. Step two, know the age and condition of your roof before you list your home. That's the first thing the insurer will flag on. Step three, have a conversation with me. Not a commitment, not a sales pitch, just a real conversation of how to position your specific home in this environment. The insurance crisis is real and it's not going to go away overnight, but it is manageable when you go in with the right information. That's why I'm here to help. If this video was useful to you, I'd ask for 2 things. First, subscribe. I put out market updates like this every single month, specifically focused on East County, San Diego. All the zip codes in East County, price ranges, what's actually moving, no fluff, no national noise. And I want to make sure, just hit that bell icon so that you get notified of my newest video. Second, if you want to walk through your specific situation, buying, selling, or just figuring things out, reach out. And if you want my monthly newsletter, the East County Collective, sign up at eastcountycollective.com. It goes out every single week with market data, local intel, plain language analysis. And on that, I'll see you on the next one.